think you guys can see my screen now. So understanding the January 2025 US inflation data and its implications. That's exactly what we're going to be looking today. So the first thing is a detailed examination of the CPI components, the impact on the US dollar, okay, and the market perception and the CME FedWatch Tool that now it's a little bit different from what it was like 2 days ago. So I think it's a really good point for us to be talking about. And then finishing up with the recent statements from Jerome Powell that has a few things to do with it. So, recent statements provide a more comprehensive understanding of the economic landscape at the moment. But as always, I see some new names here, so that's pretty good. Welcome, everyone. So if you have any questions or if you have something on your mind, don't feel scary. You can ask me questions, and I love to answer questions. And yeah, if you need any help with anything, just let me know as well. But before we go any further, I have to put the risk disclaimer up. So as usual, I got roasted yesterday. So before we go any further, I have to put the risk disclaimer up. I'm going to give a minute or 2 minutes because it's a bit long. And then you guys read through everything and I will be back in a second. Okay? Okay. Hopefully everyone could read through everything. So let me get out of it and let's get to the point. So first thing is CPI. I want to give a very brief introduction on what is the CPI. So for that, we're going to come here into FinLogics, and then we come to Tools, Economic Calendar, and then we're going to select only the US dollar. Sorry, only the United States. I get confused by US dollar and USA all the time. So sorry for that. And we're going to select today. And there we go. So this is the point. Okay, this is what we're going to be talking about. We had the United States inflation rate month over month coming in at 0.5%. The core inflation 3.3%. Core inflation month over month 0.4%, and the inflation at 3%. Those are the numbers, the CPI as nominal. It doesn't much. I could definitely explain to you if someone asks me, but it's a bit of a tricky one. It's better for us to use this one here. Okay. So for those who don't know what CPI is. All right, it's a very basic thing. All right, sometimes you see hard names or looks hard or looks scary, but no, CPI comes from Consumer Price Index, and it's a very critical economic indicator that it measures the average change over a certain period of time in the price paid by the consumer, so the end consumer, so society, on goods and services. So let's say we have the US inflation rate month over month. So always we're going to have a data point and then we're going to have a period. So I think you guys can see this red dot. So on this red dot, we see MOM. So that means month over month. This one, IOI, so year over year, and then month over month again. And we do have the quarterly reports as well. So quarterly should be like Q4, Q1, or quarter over quarter. Okay, so there's all of those types of reports. The one that the market usually follows the most, as I can probably say, is the month over month and the year over year. The quarter over quarter, it doesn't much affect. Of course, it's important. Don't get it wrong. All the indicators are important. It's just different periods, okay? But in the end, it's the same indicator. And this one is the inflation. So the CPI as well, it serves as a barometer for for the inflation. So it reflects the purchasing power of the everyday consumers and the influence of what is having on the economic policy decisions to the central bank. So this is why it's so important to always pay attention on CPI, PMI, GDPs, PPIs, retail sales, because all of those ones, they sort of have inflation aspect that the central bank pay attention, okay? So in January, that is this one that we had. So that's the month over month, January. So basically showing to us the month. Okay, so we have here month over month, January, year over year, January, month over month, January. So this is all the release from January. It could be December, all right? So it always comes a month later. So today we are in February. It comes up to be the last month. In March, it will come up to be the February one, and so on. So in January last month, the CPI for all Uber consumers increased by 0.5%. Okay, so right here, on a seasonally adjusted basis of 0.4%. Right? And it rose from the December. So we can see the previous data right here, and that was seasonally adjusted. So meaning that this was the December and this was the actual for January. So it rose pretty much 0.1%. From the forecast, it rose 0.2, but from the previous, it rose 0.1. Okay. Over the past 12 months, all the items index, it has been raising by 3%, as we can see right here, before seasonally adjusted. This uptick, I would say, was primarily driven by the increases in the shelter prices, the food prices, and the gasoline prices. We're going to be having a look at these reports today, but for those who don't know, let me just show you something. If you go to ACY website and then you come into learn and then comes into market analysis, I post market analysis every single day. Okay, so every day I'm posting one new analysis, and right here we can see that USD JPY outlook, tariff concerns, and rising US yield keep under pressure. You can see right here that I've posted the US CPI numbers by sector, all right, and the trade tension. So you can have a read at this one later. Let me just send it on the chat. My analysis, paste. We do have other analysts at house. So we have the new one, it's called Jasper. Okay, so we have Jasper doing daily analysis for us as well. A little bit different from what I do, but definitely a good concept as well. And then we have Duncan doing videos. Okay, Duncan do a lot of videos every day, doing more on a technical perspective. Okay, so coming back, let's go into the BLS. So the Bureau of Labor Statistics, and I want to delve into some specific components that contributed to the January increase on the inflation. So we just type bls.gov/CPI/ and hit enter. So I'm going to send this link to everyone. There you go. CPI BLS. I've sent it on the chat so you guys can have a look at it and follow with me. So let's just wait for everyone to be here. I know it can get a little bit confusing when you're accessing some new websites, but don't worry. That's Bureau of Labor Statistics from US. Hopefully everyone is here already. Okay, so here is the big deal, okay? We do have every single data is released by BLS, okay? And the one that is most important is the inflation. And right at my face, we can see here that I've, as I said, the shelter, the food, and the gasoline has been the ones that have been raising the most, okay? And we can see that the food has been raising 2.5%, All right, that's a major category. All of the items have been raising 3%. Energy price is 1%. And then all the items less food and energy, that's the most volatile ones. We call this the core CPI, has been raising 3.3. So how can we get access to this page here? Well, that's very simple. We come at HTML right here, news releases, HTML. Or if you want, you can download as well. You can just click on PDF, but that's what we want. So table weight, a percent change in CPI for all Uber consumers, CPIU, US city average. Okay. Now, let's get into it. The shelter price right here in the bottom, let me just get it there. The shelter price index rose 0.4% in January, accounting for nearly 30% of the overall CPI increase. And it followed up with 2 consecutive monthly gains of 0.3%, as we can see here. So on November and December, and then we had an increase of 0.4. So it was some way stable in November and December, but then we had a big jump to January 2025 to 0.4% from 0.3%. Okay. I think everyone can understand this table, right? If you have any questions, just let me know and I can certainly explain. But basically, within this category, the prices of hotels, motel rooms, it saw a rebound, if I'm not wrong, of 1.7%. Now, food prices as well, right on the top, increased by 0.4% after 0.3% in December, so a 0.1% increase. But the biggest one was grocery store prices surged by 0.5%, with the cost of eggs soaring by 15.2%. And that's the largest increase in egg prices since June 2015. And, you know, we all know that a significant rise in egg prices will attribute to was attributed to an avian flu outbreak causing the shortage of eggs in the whole world, not only on US, but we in Australia, I don't know where you guys from, but there was a pretty hard time to search up for eggs in the supermarket, because me and my wife, we try to go to the supermarket. We are on a diet. We're eating like 30 to 40 eggs a week. So that's a lot. And then every time we go to there and then there's no eggs, and I'm like, damn it, again, there's no eggs. Those chickens with flu, they have to recover quick. And you know, it's just crazy because we're trading Forex, but then in the end, that makes sense to us as well, because this will attribute to the inflation number being higher. So that's pretty interesting. The other item that I would like to talk is gasoline. Okay, so right here, 1.8%. Gasoline oil types, that's the one, right? Yeah, gasoline oil types increased by 1.8%. And the natural gasoline also rose by 1.8%. And the electricity prices remain pretty much unchanged from what we can see. Electricity, yeah, 0%. So pretty much unchanged for the month. Another notable change includes a 2% increase in motor vehicle insurance, a 1% rise in the Asian index, and a 2.2% uptick in user cars and trucks. I remember when we had I think it was 2024 or 2023, we had a big problem with used cars. Used car was going like all the way up. I don't know if you guys remember. I think it was during COVID. All the brand new cars were decreasing prices, and the old cars were increasing in prices like 22%. I don't think it's going to happen again, but you know, we can see some sort of raise on the used cars and trucks, a 2.2% raise on used cars and trucks again. So conversely, the Pearl 4 index fell, I think, 1.4% in here. Yeah, negative 1.4% in January. So what's the impact on the US dollar? If we get all of these, what's the impact on the US dollar? So let me open TradingView now and go for the US dollar index. So that's US 10 years, DXY. I think that's the wrong price. Wow, is it? Yeah, that's correct. Interesting. Okay, let me go to the 4-hour. There you go. So we're seeing quite of a big steep decline. What's happening on my chart? There you go. So we saw the release of the inflation number right here at midnight 30. So this candle here. So following the release of the stronger than expected inflation data, as we all know, the US dollar experienced, a very big volatility, as we can see, but it's going down at the moment. And the market was anticipating that a high inflation was prompting the Federal Reserve to maintain high interest rates for an extended period. However, the dollar is, all the gains is now short-lived, and subsequently it's declining. The reversal can be attributed to market participants sort of reassessing the potential economic impact of a sustained higher rates, and including concerns like slowing economic growth, the possibility of the Federal Reserve adopting a more cautious approach in the future rate decision, and they have to be paying more into the debt that they have. So it's always a problem, okay? It's not good to have a high inflation, and especially on this scenario. If we go to gold, for instance, I don't know if you remember, but yesterday I've mentioned it about a pullback on gold and continuation higher. Let me come to charts. Pound. So we can see here the pullback all the way down where I exactly mentioned it about it. And then now going up. So let me take this RSI off. And now going back up. I guess gold will continue to rise, because in these sort of scenarios, when we have high inflation with very, very sticky inflation, actually, and the central bank is trying to fight, and they can't do anything about it, it keeps growing the concern of, will they be able to retrain this inflation, or they won't be able to, sort of control inflation, and we're going to be really bad. The population starts to keep asking themselves, and the market keep asking themselves as well, shall we move to a safer asset at this moment? Well, most likely. So then, gold is the one. The implications for Federal Reserve monetary policy is the next thing. Okay, so I think it was sort of an expected rise in inflation, and it was expected but unexpected as well at the same time, because the consensus was expecting, a decline on the inflation. But it had a significant implication for the Federal Reserve, and for the chairman, for Jerome Powell. He was giving a testimony before the Congress, and he emphasized that while the economy remains strong, with low employment, inflation above the Fed's 2% target, there is no immediate urgency to cut the short-term interest rate. So he pretty much highlighted that the importance of maintaining the policy restraint to avoid hindering inflation control. I think for me, it pretty much suggests that the Federal Reserve may opt to keep the interest rates more elevated for a much longer period to ensure that the inflation trends, back toward the 2% target. But there's a big problem, because if they keep they're going to be the first one, they're going to be the only one maintaining the rates for longer. All right, we do have the RBA, the Reserve Bank of Australia, meeting this month, and we saw a somewhere more quicker than expected inflation coming down. Not quicker, but we had a big jump, I mean. And from what the I forgot her name, I think it's her, from what the chairman from RBA say, she says something like that was unexpected. It was more than what we were expecting, and that made the Australian dollar dumped pretty quick. And then we had Trump again coming over on the weekend saying that he's gonna impose 25% tariffs on aluminium and steel. Australian dollar opens with a gap down, and then Trump comes up again and say, look, we're going to not impose 25% tariffs on Australia on any aluminium and steel production because they are the biggest productions in the world. They are importing and exporting from us. We don't want to do anything with them. So then Australian dollar becomes stronger, and that's where we are at the moment. Coming back to US, as I say, those remarks from Jerome Powell, they have been pretty interesting for the CME. I don't know if you guys have heard, but the market perception on the CME FedWatch Tool have changed quite a bit. So let's go to CME. I'm going to send this on the chat right there. I'm just going to wait for everyone to join. Okay. Cool. So that's from. So okay. So first of all, what's some people may be seeing this for the first time. What's the CME FedWatch Tool? So CME FedWatch Tool comes from Chicago Mercantile Exchange, and the FedWatch Tool, it's pretty explanatory. So it's a tool that watches the Fed. Okay, what the Fed's going to do next with interest rates, and we have all the meetings for this year and then all the meetings for next year. And pretty much it's a pool of analysts, a pool of economists. Yeah, it's economists and all the people that, really high-end people that give them vote on what they think the Fed can possibly do in the next meeting. And this plays a crucial role into market because if something happens that tool is not predicting, it's going to be really, it's going to be a big move, okay? So for the 19th of March 2025, that's the next meeting. So pretty much in a month, we are on the 13th of February today. So a month and 7 days. 6 days. We are expected to 97.5% to don't have any changes. How do you look that to? So basically you have current target rate right here. So that's the current rate target that they are at the moment. And there's always a band, 425, 450, okay? And then we have right here, 97.5% expecting a no change on the rates, okay? On May, 86.1% is expecting no change, still 425, 450. On June, still no change. On July, still no change. On September, maybe a 25%, 25 base points cut. October, maybe a 25%. Sorry, no changes, sorry. And then on December, no changes. So yesterday, before the release, I'd even mentioned it here. I've mentioned somewhere here. Sorry, not on this one. I've mentioned on the other one. Let me just come back and show you guys. CPI, special USD, gold rally, tariffs. I think was this one. Yeah, it was this one. Maintaining cautions. I can't find it now. Anyways, but yeah, yesterday, you're going to have to believe me now. Yesterday, the market was only sort of anticipating a 25 basis points cut on July. And now they've moved a month to September. Okay, that's not good because basically they're postponing the cut and they will continue to postpone who else knows until when. Okay, so if the data continues to come higher and higher, we may not even have a cut from the USA, from the Fed. Okay, so coming back to here, 19th of March. So the market perception of the future Federal Reserve actions is getting worried. So as I say, the CME analyzes the probability of the rate changes based on future market data. And once we had the CPI release yesterday, the traders have sort of adjusted their expectations. And now they're anticipating the Fed to implement only 1/4 point rate reduction this year, with the possibility of further cuts diminishing. And this shift pretty much reflects a growing consensus that the Fed will prioritize controlling inflation over trying to stimulate growth into the near term. Okay. We did have the Federal Reserve Chair, Jerome Powell, giving some appearances before the Congress. And he iterated that the Fed commitment to its dual mandate of maximum employment and stable prices, as always he do, okay? He acknowledged as well that the progress made in reducing inflation is, of course, caution that it remains somewhat elevated for a long period of time. And he emphasized the need for cautious approach that pretty much for me indicates that the Fed is prepared to maintain, restrictive stance for longer. At least for myself, I think that's, maintaining, basically saying that maintain rates higher for longer. And there is a clear evidence that inflation is moving sustainably toward the 2% target. I think he also said that the importance of monitoring the potential impacts of the recent policy changes, including the tariffs. So he talks about the tariffs now because of Trump, and some regulatory adjustments on the economic outlook. So in summary, pretty much putting everything together here and giving up a summary to everyone, the January 2025 CPI data indicates to me that the inflation remains very, very sticky, and it remains a concern for the Fed as well, okay? We had an increase in shelter prices. Basically, shelter prices are homes, rental, anything related with people living somewhere. Food prices as well, energy prices. Energy prices do because I think with Trump, okay, I think if we look back on 2000 when Trump was on mandate, the energy prices were usually high. So most likely we're going to have higher prices this year. The US dollar pretty much initially had a pretty bullish movement. And then now we have a bearish, reflecting the uncertainty regarding the Federal Reserve future policy action. Because now the market is like, I don't know much what's happening. It's a little bit uncertain, the market. I want to step back and move my money to gold. So again, I think gold is a good long. Okay, gold is definitely a good long in my opinion. Paul as well say on recent statements that he suggests a more cautious approach with a focus on maintaining the policy restrained, so maintaining the rates higher for longer to ensure that inflation trends towards the 2% target. As always, the Federal Reserve will continue to monitor any economic indicators closely, try to adjust the policies as necessary to fulfill the dual mandate. But pretty much all I've said now is the US dollar may be on a period of decline. And the high inflation doesn't mean that the Fed will hike rates. It means that from what Jerome Powell has been saying, that they don't have a clue what can potentially happen now. And if they don't have a clue what can potentially happen, the market will be scary. And if we continue to look into US dollar back here, it can continue to pull back down. Okay, so should we change our bias from long to short on US dollar? I guess so, but we need more data to validate this. Okay, my opinion has been a strong US dollar for this year, at least for the first quarter, and then we're gonna always, we always see what can possibly happen later. But I see such a good opportunity for the gold. Some banks are saying that gold is going to go down, etc. I don't think so. Otherwise, China wouldn't be buying gold. Like, come on. The Fed wouldn't be buying gold. It's like the president of JP Morgan. I don't know if you guys know that, but that's a while ago. I can't remember when, but yeah, I'm not too much into crypto as well. So you guys know, I don't know much about crypto. But in an interview with Bloomberg, JP Morgan CEO say that he would never buy Bitcoin, and that if someone's buy Bitcoin, it's like a crazy person, and that he would never have on portfolio. And then what happens on the next day? He buys millions and millions of Bitcoin because Bitcoin prices went down, and then he bought more and more and more. So basically manipulated the market. I'm not saying that this will happen with gold, but I say that gold is a safe, it's a safe haven. It's a safe currency at the moment from what we're experiencing. There's always this, it's good for traders, the volatility, because you can trade long and short. You can sort of get the inefficiencies in both sides. But it's not that good for other people building normal sort of portfolios, okay? Delete all this. Eurodollar is going up, and it's a little bit of a messy technical analysis here. US dollar JPY is going up. From what we've been seeing, Japanese yen was strong, and now it's going down, and it's not nice, okay? So I guess we should be looking to position some of the portfolio into gold. Thinking about USD JPY, I have a thesis that I have to finish it up, but I guess it's a good thesis to be long in USD JPY at this pullback. Okay, would be much better if we caught here, but there's always a nicer room to get it. But for today, it's pretty much it. We had a look at very, very good look at understanding the CPI of January. I hope you guys could understand. Hope you guys had a good week with me, Tuesday, Wednesday, and Thursday. I will be back on Tuesday. So next Tuesday, what's going to be the day? 13, 14, 15, 16, 17, 18. On the 18th of February, I will be back. And then the 19th as well, and then the 20th as well. So next Tuesday, Wednesday, and Thursday, I will be back live 5 to 6 p.m. Thank you so much, guys. And yeah, have a great one. Have a great weekend, and chat with everyone on Tuesday. See you.